very warm welcome to all our investors and partners. We thank you for the trust and faith reposed in us all over these years. At Mirae Asset Mutual Fund, it has been our constant endeavor to provide a superior investment experience to all our investors. In continuation with that philosophy and with a view to provide products that can cater to different investor needs, we are pleased to announce a new fund offer, Mirae Asset Multicap Fund. The fund will tend to identify attractive investment opportunities across the market spectrum with a view to provide long-term wealth creation for our investors. The fund will be managed by Mr. Ankit Jain. Mr. Jain has been managing Mirae Asset Mid-Cap Fund, Mirae Emerging Blue Chip Fund, and Mirae Great Consumer Fund. Mr. Jain has an overall experience of more than 10 years, and his primary responsibilities include investment analysis and fund management. He has been associated with the AMC since 2015 as a research analyst. He has been previously associated with Equirus Securities Private Limited and Infosys Limited. Hi Ankit, my first and foremost question would be, what is a multi-cap fund and how it is different from other diversified equity funds from a fund management perspective?
Thank you, Shrenik. So it is a very interesting category. So multi-cap, if you look into, it has a very well-defined, guardrail when it comes to investment across different segment of the market, right? Be it large cap, mid cap, and small cap. Unlike any of the other diversified fund where there are restrictions, either maybe single sort of an capping maybe into one particular segment of the market, or maybe let's take an example of large and mid cap, which has got predefined, let's say 35% allocation each to large and mid cap. If you go, let's say, pure play large cap, mid cap, and small cap fund, they are having one particular restriction that minimum 65% has to be invested into one particular segment of the market. So this is again a very interesting category which has predefined mandate to invest minimum 25% each in all of these three baskets, and that is how I think it is also a sort of an analyst product, right? Where you do try to find out best of the investment ideas. That is why even bottom up stock selection becomes even much more important when it comes to managing this sort of a product.
Thank you, Ankit, for the response. Now, since we understand what is multi-cap from a fund manager's perspective, we would like to understand what is Mirae Asset Multi-Cap Fund all about.
Yeah, absolutely. So our sort of investment philosophy clearly remains to invest in growth-oriented businesses up to a reasonable price. What does it mean is that first priority always remains to invest into businesses which can grow higher than nominal GDP growth rate of the country over a longer time horizon, which means any business which can grow consistently in double-digit growth potential over longer term do attracts us from the business point of view. But that business also has to be backed by some sort of an entry barrier, which means ideally pre-tax ROI, return on investment across the cycle more than cost of capital. Typically, a pre-tax ROI is more than 15% across the cycle, which means that business has got some sort of a sustainable competitive advantage and entry barriers, which means it has added value to the overall business, right? So that remains one of the key aspects of it while investing into any business. Obviously, business has to be backed by strong competitive management with strong thought leadership. And then third part of it comes on to the price value equation in terms of absolute risk reward at any given point of a time, for which we are having internally defined templates and then try to arrive at that. So this remains a very core sort of an investment philosophy, and ideally 75% of the portfolio has to be built as per this while passing all of these three criteria. When it comes to other bucket of the investment is at the same time to participate in deep in value businesses. What does this mean is that try to identify sector companies where, let's say, near-term earnings outlook, growth outlook might be hazy, but longer-term growth outlook remains pretty much intact. So try to identify different sectors, different factors around some of these sectors, and then try to look at more beyond, let's say, next 12 months sort of an time horizon, and try to identify and pick and choose businesses, because in these cases you typically tend to get valuations much more favorable. So I think this remains the second bucket. Apart from this, there are certain other sort of parameters as well, like to pick and choose businesses maybe which are available at less than one standard deviation versus historical average, maybe available at, let's say, less than price to book for an business which is generating ROE again more than cost of capital, or maybe in certain manufacturing businesses, in case if business is available at less than replacement cost, or let's say business is available where sellout value is higher than the current enterprise value of the business. So these are some of the factors when it comes to pick and choose second bucket of it, which is participate deep in value businesses. So typically good mix across both, with very heavy tilt towards investing in growth oriented businesses. That is how the portfolio is typically going to get constructed. When it comes to asset allocation, as I mentioned, that category is very well defined, with 25% each participation across all three market segments, large, mid and small, and we will try to follow that particular guardrail.
Thanks, Ankit, for that response. And a very obvious question that comes to an investor's mind is, what is in it a multi-cap fund for an investor which is not there in other diversified equity funds like flexi-cap fund or a focus fund? To put it very simply, how a multi-cap fund is different from a flexi-cap fund or a focus fund?
Sure, absolutely. So when it comes to flexi-cap fund, though let's say universe is same, right? I mean, their benchmark is also top 500 stocks. And when it comes to multi-cap, those same set of stocks are there. The only difference is being that while flexi-cap benchmark is, let's say, much more large cap heavy, because it is being defined as free float market cap, right? And not being rebalanced to the tune of 50, 25, 25, which is there in case of multi-cap benchmark. So to that extent, in most of the time, you try to look into, let's say, flexi-cap mandate also gets more large cap heavy, right? Peer maybe category average is around 70% large cap. Similarly, let's say you talked about focus fund, that is altogether a different mandate, where, let's say, fund manager have to invest in a concentrated way with 30 stock portfolio, and it is a very I think different risk reward proposition altogether. When it comes to multi-cap, it is a very well defined set of category with the same NSE 500 sort of a benchmark being marked up or marked down, so that the end result remains 50% large cap, 25% mid cap and 25% small cap. And another interesting part about this particular benchmark or category is that your benchmark gets rebalanced every quarterly.
Okay.
So even if, let's say, there is any sort of a movement within the quarter which might alter one particular weight favor of one particular category, that gets rebalanced every quarterly basis. So I think that is another interesting proposition. So to that extent, I think this is one particular benchmark which do provide, I think, pretty good sort of asset allocation for an investor across all the market cap category with well defined sort of an allocation over time.
Thanks, Ankit, for that response. A very interesting and important question is, who should invest in a multi-cap fund?
Sure. So this is one category, as I mentioned, that suited perfectly for an investor. Category has potential to offer maybe slightly higher return than the large cap category, and at the same time lower risk than pure play mid and small cap category. So to that extent, I think from risk adjusted return point of view, this category suits pretty well. That is one. Second, as I mentioned, that it automatically takes care of an asset allocation for an average investor in a very, very dynamic manner, because the rebalancing is also on a quarterly basis, right? So to that extent, if an investor who someone don't want to get into hassle to really invest into large cap separately, mid cap and small cap separately in a certain proportion, this category takes care of that. Right. So single product which can take care of all the three categories in a right sort of a balance. So it remains a pretty good product from that point of view. And even if you try to look into the SIP returns into this particular category, again, I think at least on basis of historical data, to some of the other categories, or let's say like pure play NSE 500, benchmark sort of a category. So I think to that extent it is a very good product from longer term standpoint through lump sum as well as SIP manner.
One last and final question, which is very important for the benefit of our viewers, would be what is our outlook on equities at the current juncture?
We as a house continue to remain fairly constructive on equities from medium to long term standpoint. I think India is in a very sweet position as of now from overall favorable macros, as well as there are underlying micro factors are also at work, which are giving pretty good visibility from the overall earnings growth standpoint. So if you look into, let's say, from the India GDP construct point of view, domestic consumption was one piece which was always very, very interesting given India favorable demographics and continue to fire pretty well. But now incrementally over time, I think because of good government financials, I think government capex side of engine has also started firing pretty well. That is further being supported by the private sector capex as well as of now, also because of government policy measures which are being undertaken. So to that extent, we remain fairly constructive that overall longer term India growth will continue to remain fairly good. On top of that, as far as the earnings growth projections are also going to remain fairly intact. In that backdrop, I think markets at this point of a time looks fairly balanced with good risk reward over a longer time frame. From the sector standpoint, at this point, we continue to remain fairly positive on sectors like banking, automobiles, consumer discretionary, new age businesses, pharmaceutical, insurance. Some of these sectors at this point of a time looks more attractive to us, which are offering better risk reward at this point of a time.
Sure. Thank you, Ankit, for all the responses. It was really insightful, and I hope all our viewers would have benefited from this. To sum it up, Mirae Asset Multicap Fund tends to offer a balanced investment experience to the investors over medium to long-term perspective. It may form part of the core portfolio of an investor, tends to have a fair mix of high conviction growth and value ideas across the market spectrum, and invest in businesses with the quality management and sound businesses. The fund provides a meaningful diversification across sectors, stocks, and market caps. The NFO starts on 28 July and ends on 11th August. We look forward to your continued support. Once again, thank you so much for listening to this video. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.